I published yesterday, July 9th, a new blog post discussing my trades over the past few days. I am continuing to reduce my stock allocation some. I am uncomfortable with investors assigning a 0% chance that Trump will carry through with his multitude of tariff threats. Stock market index levels are not pricing in at all a resurgence of inflation later this year and into 2026, accompanied by a persistent rise in intermediate and longer term interest rates, which would be made worse by one or more Fed rate cuts when inflation is rising. I view a resurgence of inflation primarily due to the Republican tariff taxes later this year to be a more likely than not scenario, and if the Fed cuts the federal funds rate in September, with inflation moving higher then, a rise in intermediate and longer term interest rates would be the most likely scenario, in my opinion. Since no one can predict the future, I can at best make informed estimates about the likelihood of possible future scenarios based on what I know now and my knowledge of what has happened in the past. I included a chart in my last blog of the 10-year Treasury yield over a one-year period. Starting in mid-September 2024, when the Fed cut the federal funds rate by 50 basis points and then cut 25 basis points twice more later in the year, the 10-year Treasury yield moved up over 100 basis points in yield. By mid-January 2025. Lowering the federal funds rate when inflation is moving higher will call into question again the Fed's inflation-fighting credibility after it suffered a massive blow to that credibility by keeping ZIRP and quantitative easing until CPI hit 8.5% for the 12 months ending in March 2022. And then the first increase in the federal funds rate was only 25 basis points off 0 to 0.25. That's why it's called ZIRP, zero interest rates. The Federal Reserve's failure to respond to problematic inflation in 2021 and keeping extremely stimulative monetary policies as inflation surged, accompanied by massive increases in the money supply, was the second biggest mistake in the Fed's history, with the number one mistake being how the Fed responded to the 1929 stock market crash, and that response contributed to the Great Depression. Why does Trump claim that U.S. tariff taxes on imports are paid by foreign countries to the U.S. when he knows that these taxes are paid by U.S. importers directly to the U.S. Customs? He has repeatedly made the claim that foreign countries pay the U.S. tariff taxes, and most recently that claim was made when he discussed his draft agreement with Vietnam, claiming that Vietnam would pay the U.S. tariff taxes. The tariff tax has to be paid by the U.S. importer to take control over the product at the port of entry. Trump makes the knowingly false claim to deceive tens of millions who still believe Trump is honest into believing they will not be paying the Republican tariff taxes since they're being paid by the foreign country through higher prices in the United States. What if Trump actually goes ahead and imposes a 50% tariff on Brazil's exports, as he has threatened to do starting on August 1st? The U.S., by the way, has a trade surplus with Brazil, something you would not know reading Trump's messages. I'm about to quote from the U.S. Trade Representative website. Quote, U.S. total goods trade with Brazil were an estimated $92 billion in 2024. U.S. goods exports to Brazil in 2024 were $49.7 billion, up 11.3%, $5 billion, from 2023. U.S. goods imports from Brazil in 2024 totaled $42.3 billion, up 8.3%, $3.2 billion, from 2023. The U.S. goods trade surplus with Brazil was $7.4 billion in 2024, a 31.9% increase, $1.8 billion, over 2023, end of quote. Wonder how many Trumpsters know that. A major export from Brazil is coffee. Companies that sell coffee to U.S. consumers import the beans from countries in Central and South America. I suspect even Trump supporters know that. And all of those countries are being threatened with higher Republican tariff taxes, and 50% on Brazil's exports of coffee. So coffee prices will surge. Brazil is also the largest exporter of orange juice. Much of the Tropicana and Simply Orange brands use Brazilian oranges. So orange juice is about to surge in price to U.S. consumers. Brazil is not paying the U.S. tariff tax. Brazil also exports steel and aluminum to the U.S., which are already subject to 50% Republican tariff taxes. Brazil is going to respond in the only way possible to this, and that is to raise its tariffs on U.S. exports to match U.S. tariffs, which would be 50%. Possibly the only economist in the universe, and I have to expand that to beyond Earth to include the universe, and I probably need to add in all dimensions known and unknown, who believes that U.S. consumers do not pay tariff taxes, works for Trump. One of his theories is that the tariffs will cause the U.S. dollar to rise in value against foreign country currencies, thereby partially offsetting the U.S. importer's cost. When the dollar is rising, the import costs less. That is not happening. You would think that would change his opinion, but it has not, as far as I can tell. The U.S. dollar is weakening against major currencies, which increases the cost to U.S. importers independent of having to pay the Republican tariff taxes. Look at the U.S. Dollar Index, symbol DXY. The index tracks the value of the U.S. dollar against a basket of 6 major foreign country currencies. When the index is declining, that means that the U.S. dollar is losing value against those currencies. The close today in the DXY was at 97.58, down from 109.35 on 1 January 2025, the day Trump was inaugurated, after more than 77 million voters who have observed his conduct and rhetoric for over 8 years decided to give him another 4-year term as president, knowing, or must be presumed to have known then, who and what he is.